Investors and traders, welcome to the channel. Market chart pattern today, 16th of March 2024. I hope everyone is having a great day and the weekend. In this video, we are going to take a look at the key US financial stocks and ETFs. We will be covering the KRE, which is the Spider S&P Regional Banking ETF. We'll also take a look at the XLF and the individual key US banking stocks. This video is for educational purposes only and it's not a financial advice. So with that, we'll begin to take a look at the KRE. We are looking at the weekly chart of the Spider S&P 500 Regional Banking ETF. This comprises the regional banks such as the Silicon Valley Bank, which unfortunately went belly up last March. So it's going to be about anniversary time for that when it happened. And the Federal Reserve came in with the help of Treasury, and they managed to put in a lot of liquidity with the tune of about 300 billion back last year for the within the financial system, and that did help with the broader market to pick up and stabilize the banking system. So with that, what we are looking at in this chart is when we took a look at this last time, this ABCD pattern was completed on the 11th of December 2023, and we were expecting a pullback to happen because it was right at the 38.2% Fibonacci retracement as well. Whenever we have two ratios or a ratio and a pattern coming together, whenever there's a confluence of two or more things, is something which we pay really close attention to. And ever since, what we have seen is just the price basically goes sideways to down, and it's resting at 50% retracement of this CD leg. Now we can look at this in two ways. As long as this point around $46, $45 per share level is held, there is a chance that we could in fact be looking at another one-to-one price projection A, B, C, D, which could in fact see the stock go up to about $62 per share level. However, put a question on it, because the number of weeks the market has gone sideways, this is making it more of a suspect now, in my opinion. So for example, this is when it topped 11th of December 2023. Then we have 1, 2, 3, 4, 5, 6, 7th week was an attempt to rally but failed massively. 8, 9, 10, 11, 12, 13. So it's been a little over 3 months now, which is quite a long while. And if we just look at this trend line, we have 1, 2, 3 points joining right here. So there is a possibility, in fact, that this 50% level could in fact get challenged and the price actually begins to move lower, which could have its own repercussions, because which means that the banking stocks for the smaller banks, regional banks, they are coming under some sort of stress one more time. And if we just look at the price action on the left hand side, we have seen this kind of sideways price action before as well, and then some kind of a news broke down. So this means that the downtrend, which started from the 18th of January 2022, that week, it is still in play. So we have these two scenarios here, and we are just waiting and watching for further price action confirmation, because we also have this pennant formation downward trend line. This is my attempt at drawing another trend line here. We can draw it a little bit slightly differently. I could try joining this something like this. No, it doesn't make sense, but there is a possibility that this low is really key low, which it needs to hold. And the other scenario, which is becoming more of a suspect now, is whether we have another one-to-one price projection, which could in fact take the stock go to $62 per share level, which is also 61.8% retracement with an ABCD formation. That's gonna be a pretty strong resistance level to take a look at. With that, let's now take a look at XLF. So this is the weekly chart of the Spider Select Sector Fund financials, and if you look at this chart, it's a very different kind of a picture from the KRE, and the rally which started from 30th of October, that's really in play, and now it's just going and challenging these highs. Here we go, let me draw this for you. Here we go, around $41.50. So it looks like it might actually make an attempt to take these highs out, and there's a possibility that that might in fact be a possibility of a double top formation here as well. Now here, from a momentum perspective, the market remains strong. It's above the 78.6% retracement. However, it might be around 1.618 expansion. There we go. That's what it has reached here, which is basically 1.618 expansion of this BC swing. So if we were to draw it like that, this is what we are looking at. This is the 1.618 expansion. So whenever the markets reach the 1.618 expansion, the chances become that perhaps that could be, at least we could be looking at some sort of a pullback. So if we just go down to the daily chart, and this is what we see, that as soon as the market actually hit that 1.618 expansion, that which we have seen of the weekly chart, we have seen some selling pressure come into the market, and last Thursday was a fairly negative daily close, and Friday there was actually a positive close. So basically it's a trading range. So now the market seems to be transitioning more into the trading range, and if you just look at this, just the trading bars, you see very little black bars, which is a negative or a bearish bars, and most of them are the positive or the white bars, which are the basically positive closes for the day. So if we begin to see a mix of a black and white, or positive and negative, or bearish and bullish bars, that is going to be an indication that the market is actually transitioning from a strong trend, which has been an uptrend, into a trading range. So this is what we are actually looking at, just to give you a kind of an idea. If we just look at this rally of the 2020 lows, here we can see a pretty strong trend in place, and then the market began to transition into a still, I would call it a trading range. However, we're still trading higher, but we began to see more bears and then the bull bars, kind of a mixture of those. So we haven't seen that on the weekly basis yet, but with this 1.618 expansion, I wouldn't be surprised that we begin to see more of a trading range behavior appearing in this market. Now let's take a look at the Goldman Sachs stock. This is the weekly chart, and here the interesting thing is the Goldman Sachs. So the last video that we did, I don't remember exactly the date, we were looking at this pattern. This is actually one-to-one price symmetry here, and the market is not able to take out the 78.6% retracement from these highs to these lows right here. And it's been over a month now, the market is just trading sideways. So this is a perfect example of a trading range. So in fact, on a daily chart, it's more prominent that the market is in a trading range, but the fact is that it's not able to take out this 78.6% Fibonacci retracement, which it needs to do to be able to take out these all-time highs and move higher. However, if the market begins to basically take out some of the lows here of the last week, the lows of the week of 16th of January 2024, then chances become more that it's going to go and catch up with this 20-week moving average, and even retrace down to up to 38.2% retracement, around $350 per share level, and the market is just in a sideways trading range. With that, let's take a look at the weekly chart of JPMorgan. JPMorgan is a very strong stock, and whenever we take a look at this, I just want to remind you of this really strong trend line which is in place in the stock ever since 2009. There have been pretty strong corrections in the stock, but every time this trend line is still intact, so we need to keep that in mind. And what is really interesting is that this stock is actually at really interesting level at around $192 to $200 per share level, because not only that we have the 1.272 expansion of this entire swing, I haven't labeled this swing, but from 25th of October 2021 to the lows of 10th of October 2022, reaching that, but we are also actually reaching ABCD or 1-to-1 price projection. So we have the smaller one here, this low to this high projected from this low, we get about around 193, and the bigger one, which is from the COVID lows of March of 2020 to 2020 to the highs of November or October of 2021 to the lows of October 2022. That's also completing around $196 per share. So which means that $200 per share is a very, very important level to be watching, because we have more than 2 patterns and ratios coming in a close range and forming a confluence level. And whenever there are 2 or more patterns or ratios coming together, we pay really close attention to, because those happen to be either very stronger resistance or support levels, depending upon the way we are looking at the market. So in this case, about $200 per share level could be a fairly strong resistance level that we'll be watching for this stock. However, the stock is performing really well from a momentum perspective. Look with the 20-week moving average, it's a big gap of about $30 or so, and look where the 200-week moving average is, which means that let me just draw, if there is going to be some sort of a correction or a pullback rather in this stock, a really good level to be taking a look at would be around $170 per share level. That's also 38.2% retracement of this leg swing, and then of course the structural highs coming onto the left hand side. With that, let's take a look at the Bank of America. So this is the weekly chart of Bank of America, and Bank of America is actually one of the banking stocks in the United States, which is really favored by us, because we did a long-term analysis for the Bank of America. You can actually look at some of the videos. I'll try to find a link to it and put towards the end of this video. Based on the longer-term charts, it's also an educational video where I actually showed how what are the cycles and how those cycles are working in this market. So what we were looking for was a resistance within this zone of $33 to $34 or roughly $35 per share level, and then the market has actually broken out of it for a couple of weeks. Last week formation was a doji candle, so there was a fair amount of fight between the bulls and the bears, and no conclusion was reached. However, if we look at this candle, there's a fairly long tail on top of it. It's something I really do not like. Maybe it was just lost momentum, so we'll have to wait and see. And while it's encouraging that the stock was able to break out of this 38.2% retracement coming in around 34.45, I would really like to see more or stronger price action in the next coming few weeks, so that the stock is actually able to go and tackle this 38.35 level, which is the structural high right here, and also it's very close to the 50% retracement as well. So this is what we are watching in the Bank of America. The stock is pretty strong. We have a really strong trend line here around where we found pretty much the bottom for this one back in October of 2023, and we have had a pretty good rally in the stock. Now let's take a look at the Morgan Stanley. This is the weekly chart of Morgan Stanley, and we looked at it last time. We were disappointed to see the price action because it found pretty strong resistance at 94 level coming from the 78.6% retracement. So we have this downtrend line in action, and then we have this big one here. So it's actually a pennant formation. What is holding the stock right now is 38.2% retracement. If the stock is actually able to close below these lows of 83, then the chances are it's going to go and test this rising but down trend line here. So the chances of that are now actually increasing in Morgan Stanley. Let's take a look at Wells Fargo. So the Wells Fargo stock is really interesting because it was able to break out of its bearish symmetry, and this is the region that we had drawn before, and we were looking for the stock to get into this region, and this is where it has exactly gone into, and it's actually filled this candle which you see. It's more of a gap candle in my opinion. I'm not going to go into the concept of that. And also we have this timing coming in. So if we just take this high to high and just project it from there, we are actually next week getting into some timing as well. So we'll have to wait and watch and see how the price action is going to look like for this stock for next week. Because the possibility is that this stock is actually going to run into some resistance, which could be a pretty strong resistance as well, because we have this 1-to-1 ABCD price projection completing right here as well. And if I were to just draw the 78.6% retracement, it's above that, so that's good, and that we were expecting anyway, because we had drawn this zone right above it. Momentum is strong for the stock, however, because of the gap it has moved into and this 1-to-1 price projection, the chances are increasing for this stock to perhaps stall in here, go into a trading range, and maybe even perhaps pull back a little bit. So we'll be watching this one really carefully. Finally, we'll take a look at CITI Group. So this stock has been one of the weaker ones of all the stocks for the major banks that we have looked at. And the fact remains that although some of the stronger banks as JPMorgan, Goldman Sachs, they have gone and made new all-time highs, and this stock has not done that. Look, this is 2019 high, January 2020 high. It tried to make a high in June of 2021. It was a recovery high. It was never able to make a new all-time high. Never able to take these highs out, and it just stock has it speaks, it tells you a story itself. And where it is now is it's above. From a momentum perspective on the weekly chart, it's not great as well, because the 200-week moving average is above 20-week moving average. So here maybe I think it's approaching its 50% retracement. There we go. So it's really close to the 50% retracement, but looks like it might be actually losing momentum. So we'll be watching this stock carefully as well. So thank you very much for watching the video. Good luck and good trading, and speak to you guys soon.